the D-Time experience. Where they at, though? What's going on? Oh, there we go.
Yo. I thought it was going to call me again. It didn't even call, so I had to join.
Yeah, I don't know why it was doing that.
Yo. How's everybody doing? Happy Tuesday.
Yeah. Back at it again. Don't forget to send them out.
Yep.
I need to make a group just with all 50 people in it. Send them out. All right. Hit my limit. Successfully sent. Another Market Monday review brought to you by the crew.
By the crew.
Yeah. We'll dive into a few different topics tonight. What? 1, 2, 3, 4, 5, 6, 7, 8 topics. A couple of them are pretty small, though.
Mm-hmm.
Wait for a few other people to join. Steffi 206, what up? Dre
What
Deuce,
up?
is that your people?
Huh?
Is that your people? Dre Deuce?
Might be.
Well, what up, Dre? You are people now. Welcome in.
Beautiful.
Let's keep them rolling.
Miss Beautiful. How you doing?
We live. Time is it? 6:36.
Yeah. We got a lot, man, so we might as well
get it to it.
Get it while it's hot, you know?
Let me see. All right, yeah, I'm trying to stall. Come on, y'all, roll on in here.
Come on, man, join us real quick. Join us, tap in to Square Knowledge real quick.
Get on with the squad. They're gonna roll in. All right, I'm doing Cash App giveaways.
Cash App, y'all. Come on in now.
Yep. All right, we'll slowly start it then. Here we are again. We're on a 12-week stretch, man.
Okay.
3 months for us.
That was wow. Okay, I didn't know. That's been rocking.
Crazy, huh? Episode 12. Yeah, okay. Just trying to stay consistent. Bringing you guys the Market Monday review like we always do the last 12 weeks, man. The guys at EYL. And actually, Market Monday is Ian's show. So I guess it's kind of brought to you by Ian and Red Panda, but they team up with EYL. So
okay.
Yeah.
Good to know.
Yeah. So yeah, like always, we're highlighting the knowledge of the three wise brothers, Troy Millens, Rashad Bilal, and Ian Dunlap. We're reviewing their content from last night's episode of Market Monday. So we're giving you guys the Market Monday review. What's up, Sabrina? So yeah, man. You know what it is. Before we get started, we are not financial advisors or CPAs. Our content is for entertainment purposes and educational purposes only. Trading and investing has considerable risk. Please do your own research. Please do your own analysis for your own circumstances. And please consult with a financial advisor. Cover your grounds, man. Do your own research. But let's hop to it. Let's get to these hot topics, man.
Let's start us off, man. Like you said, man, this is the highlights of the Monday market updates, and we're gonna go with the first, right out the gate, option traders versus Russia. It was an interesting topic. Obviously we'll dive into it. It's actually, I feel bad for him. You know what I'm saying? I'm gonna kind of give you guys a spoiler. I feel bad for him just because they made a great play, and it might not turn out in their favor. But yeah, tap into it, man.
Yeah, exactly. So yeah, like you said, it's not looking good for a group of investors out in Russia. So while we all know Russia's been in the news with Ukraine and stuff, and so when this was all just getting going and starting to escalate, right? There's some option traders. There's a group of investors in Russia. And you know what? They might not only be in Russia because it could have been one of us. You feel me?
Right.
But I think maybe that most of them are based out of there. I don't know. Take it with a grain of salt. But so there's a group of investors in Russia, and they shorted the Russian market. And what that means is they took an option trade. When you take option trades, you can do a call or a put, right? They did a put, which meant that they were betting on the market to go down. And as we know,
the Russian market to go down.
They're betting on the Russian market to go down, exactly. And as
what do they call it? Ruba? What is that? What do they call it?
Their money. What is it called? It is something like that. Hold on, I'm gonna do it right now.
Sorry, I'm just trying to give y'all all the facts.
The ruble.
The ruble. Okay.
Yeah, the ruble.
I was close.
They're betting on the ruble to take a dive, right? To drop in value. And it was a great play because that's exactly what it did. The Russian currency has dropped tremendously in value. But the cool thing about it is the Russian stock market was cut off, put to a halt. Mm-hmm. So you can't place any bets or can't place any trades or execute any trades. You can't pull money out of it. And why this is so what word am I looking for? Why this is so concerning for these group of investors is whenever you have an option contract, it comes with a date, an expiration date, and the expiration date for these investors is this Friday, the 18th.
Yeah, you usually do like an 8-week or a 12-week, most likely an 8th week contract out, and it's kind of like you said, Friday is that day deadline.
Yes, Friday's that day, and most of us can bet they're not going to turn the Russian stock market back on Friday so that all these investors can cash in. What they're looking at is $370 million. The total loss that it's going to be is $370 million
for the whole group. not just one person.
For the whole group, exactly.
Yeah.
Yes,
but that's
exactly.
still a lot of money.
Yeah, it's life-changing money for the whole group, you know. So yeah, that's just really alarming. That's why we touched on, and the guys touched on a couple episodes back, might have been the last one, about being careful trading in exotic markets with governments of these types of governments, because I mean we're aware of it. The government is clearly aware of it. They're not just going to turn this back on so they can have a $370 million loss. Those contracts are going to expire. And what's cold about that, they're not only going to get the money that they would have gained, they're going to lose the money that it took to put up. You feel me? So, you know, that's sad, man. It's sad because these guys, these are like home run hits that investors dream of making, right? And that they're not gonna have a chance to execute that. So, you know, you have to be careful trading in these exotic markets.
And you got to be, and that's why one thing, Ian always talks about, you know, always going with the quality bet or quality stock or, you know, the top 5 or this and that, because in the long term, right? Because obviously this is option swing trading, and this is where the risk, and even though it's high risk and high reward, but this is where, you know, this could happen. Even Rashad talks about how this happened to him, case in point with GameStop. You know what I'm saying? They came up the day, you know, came up like 50 grand, I think he said, and he couldn't do nothing about it. They just wouldn't let him buy out, wouldn't let him trade, you know, and take his money out, sell it, or no one would buy his option, and he kind of lost in that regard as well. So,
yeah, because that's the thing. They're always with purchasing and selling stock. There's always someone on each end. There's someone purchasing and someone buying. He says he doesn't know really what happened, why he wasn't able to execute, but maybe it's because nobody on the other end was willing to purchase that his option call, you know, and you know, you just don't know. You just don't ever know. And Ian put Ian's like advice to that when you're in that type of situation, when you see your money running and it's going up, to pull some out, take some profit and let the rest keep going, you know, because you just never know. You gotta always play defense. Play defense and follow the whales. That was their those were their keynotes for that segment.
All right. So, and then going to the next segment, is a global recession on the horizon? Yeah.
So we talked about a recession last week. Ian, you know, is predicting we're at the beginning of one. He also predicts it to hit pretty hard, you know, so like 18 to 24 months possibly, but we'll see, you know. A global recession this year is possible. So one thing that I think it was Downtown Josh Brown was talking about.
Yep.
We did a review episode of him a few weeks back, and so he was saying if we don't rebound, usually when you enter a bear market, if we don't rebound rather quickly, then that is a sign for a prolonged recession. You know, a global recession is when not only when our market is hit in America, but all markets are hit across the world.
Right.
You know?
So like, you know, basically when wars happen, when what was it? 2008, the housing market, that was kind of a global thing.
Yeah, global financial.
So all those type of are global recessions. Great question, beautiful.
Yes, great question. What's up, Miss Terry? So yeah, like you said, the housing market was a global crisis, and it was just a housing market crisis here, right? But it was the finances that messed up the global part of it, right?
Right.
America, we are the cash capital of the world, you know. As of now, I actually learned something earlier on a different show that I watched. I want to touch on that at the end.
Okay.
If you remind me. But so yeah, it can last longer. Option 12 months. Yeah. So in times of uncertainty, do less. think we mentioned that in the last week. A lot of stuff does get repeated, and it's because it's worth repeating. So we've talked about that when the tide gets tough, you got to go with your heavy hitters and do less. This isn't the time to be in the market trading crazy and taking risk. It's a time to secure the bag.
Right. Another thing to add to that is play defense with you know what I'm saying. Obviously, it's all of us want to make money and generate more profit in our bank accounts, but play defense. You got to make sure you're watching all angles, because just for example, for our last segment with the options versus Russia, the traders that made a great bet, but you got to understand that what I'm saying, you're in it for yourself. What I'm saying, not the companies aren't going to help you, other investors aren't going to help you, so you just got to make sure, because at the end of the day, stocks is someone buying from you, you buying from someone else.
Yeah,
so it's
I think they call that a zero-sum game.
A zero-sum game. So so you just got to make sure you're playing defense, and you're being you're playing it safe, and you're making sure you're protecting your money at all times.
Yeah. And something else to add to that, why like this global recession thing is a topic, especially when it comes to option trading, why you have to be careful, is because, like we said, with option trading, you're picking on a price to either go up or down. So if you have a 12-month option and we're in an 18-month bear market, your 12-month option can expire while we are still in a bear market, while we're still trending down. You may have a call for a price to get over a certain price, but if your contract expires in 12 months and we're in an 18 to 24-month bear market, you could be on the losing end of that deal. So,
so you just got to do the research. You got to read the charts. And this is where learning how to read the charts, learning how to read your moving day averages is key. You know what I'm saying? And not just, the week. And, you need to learn the month, the year. And that's going to be an ongoing process, because I'm still learning them, right? I work off of the 50-day and the 200-day moving day average, and I'm still, even though I know how to read charts here and there, but I'm still learning. You know what I'm saying? I'm still a rookie to the game, but I'm getting there.
Yeah. And Ian's buy-in point is actually the 72-day moving average. Just an extra little caveat. One last thing for the global recession that I gotta say, at least, is it's kind of repeating. Like we said, you got to stay with the top hitters, right? The heavy dogs. And in Ian's words, he's saying there's maybe 21 good companies in the world, maybe. Mm-hmm. So, like we said, top 5 in every sector, top 3 maybe with the times of uncertainty right now, right?
Right.
So yeah, that's what I got for that.
I got my Baton Rouge homies and New Orleans homies in the chat. Appreciate y'all, Josh White in the building. My guy, my day one out there. Okay, I appreciate y'all.
Dirty.
Appreciate y'all tapping in. But yeah, moving on. So we got Amazon split. I don't know if you guys are, obviously Amazon is a guru, a staple in the game of basically everyone's life. If it's not, you live under a rock for sure. So Amazon split is something that's, hitting the news, that it just came out. We've kind of said it in the past, or at least the gurus of Monday market updates have. They kind of mentioned it because everybody else did it, Google, and they were kind of the last ones. And we're about to tap into that.
Yep. What's up, Allie? They mentioned it a few weeks back, maybe a month or so ago. We definitely covered it. Damn, how do I get that off your screen? That's weak. I waved at Allie, and now it's just sitting there.
It'll move. It'll go.
Will it? Okay. So, yeah, they covered it a month or so back. Actually, I think it was at the beginning of the year, because they were doing like their yearly picks and stuff. So,
yeah,
it was at the beginning of the year. Amazon is actually one of Troy's picks for the year. Slim with the tilted brim. So yeah, they're the last. Amazon's the last tech stock to split with a four-digit price. Right. So there's kind of some obvious reasons why companies do splits, especially when it gets up to a price so high, is because a lot of regular people can't really invest in that. You can buy fractional shares and stuff, but it just doesn't it's not quite the same as owning a whole stock. You know, people want those whole stocks, those whole number of stocks in their portfolios. So so them splitting, it offers, they basically like open back up their consumer pool a little bit. You know, more people are able to reach them now,
like us,
and consider them. Yes, exactly. So, and another reason why they do it is to get into the Dow Jones. The Dow Jones, if you guys don't know, is an index. And if the price is too high, the Dow Jones won't include you, you know, because it'll weigh too heavy on their on how they what'd you say?
On their metrics.
Yeah, exactly. On their metrics and how they allocate things. So
and I don't know.
So
if
yeah,
mentioned it,
those are kind of like, you know, top two reasons why it helps them get into the Dow Jones, and it, you know.
Yeah, I don't know if you mentioned it, but
what was that?
I don't know if you mentioned it, but it's going to be a 20-1 split. To where it's going to bring them back.
No, I didn't.
Yeah, it's going to be a 21 split. And this is just a split, you know, like he said, is just to obviously to get more consumers. They got to obviously, as everyone knows, Jeff Bezos stepped down to a different position, I believe. So forgive me, I don't know the guy's name. That's the next CEO, but you know, to help him, you know, start his reign of terror with Amazon, he decided to bring in more consumers for him. And then this is not even talking about what, you know, Amazon has in store and how they're just, you know, they continue on moving the needle. One thing that they mentioned was they might be the #1 shipping company here pretty soon, passing UPS and FedEx. And you know, that's not even their niche. Supposedly, obviously, it's, you know, products, but so they're changing the game for sure. So the fact that they're doing this, Ian Dunlap, you know, the investment guru, talked about how this will be a great long-term investment for the next 10 to 15 years. One of the top 10 companies that we always talk about, probably top 5 to be honest with you, but because of the price was so high, it was probably top 10 just because not everyone can, you know, it's damn near $3,000 just to buy one share. So, but once it goes back into that $100 range, it's gonna be, you know, it's gonna be a ball game. And when that's gonna happen, it sounds like it's gonna be May 27th.
Yeah. So yes, it's gonna split on May 27th, and people are probably wondering. I was wondering, should you buy now or after the split? You should buy after the split. Also, with them doing this split, they bought back like $10 billion worth of stock. So, it's a long-term hold, and buy after the split. It will split May 27th. DB, I know his on May 27th, his stock position in Amazon is going to split 20-1. So, congrats to you, my brother.
Boy. my boy, the boundary. I'm loving this.
So, wait, May 27th after the split. Go ahead and get in.
Yeah, I mean, this is just one more thing, one more caveat to it before we, you know, move to the. Ian also talked about how this is going to probably put pressure on Disney, just because I'm not exactly sure how, but it's going to put pressure on Disney and all these other platforms that are like it, and even though Disney,
because they have the streaming.
Yep, exactly. The streaming, and that's what I was just about to get to. The streaming services. Disney also is, you know, they have a gym in place to where they're gonna have multiple tiers of subscriptions. Obviously, they have the Disney Plus and all that stuff, but then they'll have you know, the sports section, and I think they're gonna have like one with ads, right, to where they can make money on that side as well. So. So it's gonna be interesting to, you know, obviously with the recession, the global recession, everything that's going on, and with that COVID, how that's either coming or going, and then with all these big companies making their moves. So it's gonna be real interesting how everything plays out. But moving, you got anything else to add? My bad, I didn't mean to.
Nope. Yeah, you're good. We can step on.
Right. So the next one I got, China market sell off or shut down. We'll kind of get into that. What's going on over there? Obviously, you know, you got a little information on them. So yeah, I'll let you go ahead and tap into that.
Yeah. So The China market, I think it had like I think they said an 8% sell off. They're having allegedly another COVID scare over there, so they shut down. They closed factories for 6 days, and what is that? Oh yeah, okay, I'll get to that. But yeah, so they closed factories down for 6 days, and I think what did they say? 1/5 of Apple production is in one of those cities that was shut down. So that's why it's scaring off.
It's relevant to us because obviously Apple is a huge part of our business around over here.
Yeah. So yeah, it's scared off some Chinese investors. Like I said, it's another COVID scare. So they closed factories down for 6 days.
Allegedly, it's not been yet stated or reported, but allegedly they have COVID again out there.
Yeah.
Just make sure we saying it correctly.
Yeah. There's also rumors of companies being delisted, and also when you're owning shares of like companies that are overseas, of exotic companies or in exotic markets, you want to read the fine print, because sometimes you'll be advertised something that actually isn't a share of a company but share of an offshore account that like has the shares of the company, something like that. I don't know exactly how that works. I've never invested in an exotic market, but yeah, if you do, if you're getting your toes wet in those markets, definitely look at the fine print and make sure you're actually buying shares of that company and not of like an offshore account.
Yeah, Be Fresh, how you doing, my boy? BP, how you doing?
Yep.
Appreciate you tapping in, my boy. Appreciate that.
Yeah.
Did you have any more with that? That was kind of
yeah, that was a quick one. No, yeah, this next one we can move on. The next one will be pretty quick.
Okay. Yeah, the next one's go quick, and obviously we've been talking about it. Obviously, you guys have been hearing it in the news, but Russia versus Ukraine, obviously, is still going on.
Yeah.
One thing before I'll let you tap in, it's interesting because obviously we said it before, but before we were rallying obviously trying to help Ukraine in the like I said before, that this new age war is all about financing and the economy and tech and all that good stuff, and we were kind of putting pressure on Russia with with Netflix, Apple, Visa, and all them basically shutting down all things towards Russia, to where they weren't going to be able to fund stuff or use their money and all that good stuff. But then obviously China came back into the picture, and now they're helping. So that just kind of shows that this is going to be a long one. You know what I'm saying? Obviously, it hurts that, obviously there's going to be bloodshed as well. It's a war, you know what I'm saying? So it's, as we all know, the wars that we've seen and been a part of, they last for years. So this might be one of them as well. Hopefully not. But so just be on lookout there for that. And, and the one thing that you hate to say, but with the recession or depression with the market, you can come up mega, what I'm saying, just how it works, right? The market goes down. That's when for long term, you can come in and let it come back up when everything kind of reallocates, if that's the word you want to use. But yeah, so I'll let you kind of tap in a little bit more what we had on there. But it was just interesting to know that it could have been ended real quickly if China never made that move, or maybe, right? That's alleged. Who knows what could have happened, what Russia had in store. But it's just kind of interesting that this could have been. It's a different age war. So I just thought that was interesting.
Yeah. So yeah, they were just real quick on it with their highlights on this segment. But basically, it's still escalating. But Ian actually thinks it'll be over by the third quarter. And what's interesting about it though is the missiles that have supposedly been fired within miles of Poland. And why that is news is because Poland is a part of NATO, and so are we. So it would, if they do go into Poland, hit Poland, then it would force our hand, So
yep,
that's why this stuff is escalating. That's why we're keeping an eye on it. So yeah, that's really all we got for Russia Ukraine. That's all I really got for the Russia Ukraine segment.
And obviously, you guys probably been keeping track of it as well, so you guys probably already know that stuff. So yeah, just keep your eye on it because it definitely affects the market. It definitely affects our economy, and definitely affects what we do, especially if it hits Poland and continues. So just keep on the lookout on that.
Yeah.
Next segment, four-part blueprint to the swing trade.
Yeah, wait a minute. Okay. Hold on, yeah, before that, I may have skipped one when we were talking about it. 4-part blueprint. Yeah, we'll do the 4-part blueprint real quick and then we'll go.
Okay.
Back to what I got here. So yeah, the full 4-part blueprint to swing trading. Hit them real quick. Huge risk to reward. So if you were risking $1 to win $11 or $1 to $25, anywhere in that range. When you're swing trading like this, you don't want to have high risk, low reward, or even high risk, high reward. You want to have low risk, low reward. Pretty straightforward. You want to back test your strategy to see if it works in every market. How you can do that is go back in the charts and look what happened over time and test your strategy. See if you would have entered at this time and executed at another certain time. Would you have won? Would you have lost? How would that strategy have worked? Number 3, stand by your number of trades for the year. We've talked about that a lot too. Sticking to your plan, sticking to your strategy, not deviating. Number 4, only trade your setup. And that kind of ties into number 3. Stick to your plan. Stay in one lane and master that lane. Do what you know how to do. And don't try and, like Ian was saying, don't try and cut hair one week, sell weed the next week, buy shoes, sell the next week after that. Be a babysitter, be a dog walker. Don't do all that. Stay in your lane. So yeah,
what's good, P Sounds? Appreciate you tapping in.
What up? So yeah, risk versus reward, back test your strategy. Stand by your number of trades and also only trade your setup. That's the 4-part blueprint. And then I also have the portfolio construction. That's what I think I forgot to mention.
Okay, yeah. Yep, I got that.
Yeah. So we'll just dive on.
Go ahead, tap in. Might as well just run it.
Yeah. That kind of ties into this one. So basically a portfolio construction for success, right? How many long-term positions you have and how many swing trade positions you have. And also for crypto, how many long-term cryptos do you have and how many swing trade cryptos do you have? Only one investment or one type of investment is bad. It's not a recipe for success. It's a recipe for disaster. Because if you only have one type of investment and something happens to the market, and like if you only are invested in real estate, right? We have another real estate crash. If you're not diversified in other areas, in real estate, in anything else, commodities, bonds, whatever, then your whole portfolio can get hit, right?
Yeah.
So having multiple investments and
diversify.
What is that? Yeah, exactly. Be long term. Oh yeah. So have your long terms and your swing trades. Sorry, excuse me. Having your long terms and your swing trades together, it helps you be profitable in any market. Because in times like now, when your long-term portfolio is bleeding, you can swing trade the downside to make sure you're still making some money. You feel me? So having those two, like LeBron and D Wade, is gonna get you a couple rings. You feel me?
Come on. Okay, I seen that. That was a segue right there.
Have the long-term guy flying high for 20 years. You feel me?
Yep.
Have the swing trader right there. He gonna do his thing, just on a shorter window.
Okay.
So yeah,
I like that.
That's how you wanna construct your portfolio with the long-term and the swinging positions. And more than one lane. So yeah.
Okay. So moving on. So the last segment of the day, obviously we might have question and answers, because I know I like to ask some questions too to my guy here. But keys to success, man. What are some of the keys to success? They've had this question before. They've had this segment before. And it hasn't. To be honest with you, it hasn't changed. They said the same thing, but it's good to to bring it back. So go ahead.
Yeah. I'll just touch on the few words they said. If you guys want to listen to them dive deep into it, definitely check out the episode. But yeah, their keys to success. Rashad said consistency and originality. Oh, my bad. I think that was Troy who said that.
That was Rashad. That was Rashad.
Oh, it was. Oh, and then Troy added the persistence. That's where I messed up. That's where I messed up in my notes. So yeah, Rashad's keys to success was consistency and originality. Troy, he added persistence to that, and Ian's was being relentless at being the best.
Yeah.
So
being great at one thing.
All pretty. Yeah, those are all pretty self-explanatory. So yeah, I think. Oh, and then also one of the guys asked about Nike. Nike hit a 52-week low, and so it's getting into buying territory for some people. And Ian's buy-in for Nike, if you guys want to buy in for Nike, would be at, I want to look at the chart, but it's at $107.
And 21 cents.
Yeah. So right now it's at, come on, Trading View, don't do me like that. Right now it's at 119. And it's been trending down for quite some time, like the rest of the stocks in the market right now. So yeah, Nike's definitely, it's a safe bet. It's a long-term bet for sure. And yeah, we all don't think Nike's going to be going anywhere no time soon. So it's at 119 right now, and it is pointing down. Like the indicators, my two indicators that I have up, the 200-day moving average is sloping down, and the 50-day moving average looks like it's dropping off the side of a mountain. Mm-hmm. So,
and then did you catch that the Troy and Rashad little convo about Nike pulling out a Foot Locker?
Yeah, but then they backed out of it. So I think that they know somebody.
They said no. He said Nike's pulling out a Foot Locker, but Rashad said Foot Locker is done. They're dead. But then he said, never mind, they're not dead. He never said Nike wasn't still pulling out. So that's interesting. So y'all be on the lookout for Nike. Nike might be making some moves here. But yeah, so while we're talking about stocks, any weekly updates you got for us, my guru homie? Do you have any stocks that you're looking at that you put it back on your watch list? Did you make any moves? Obviously, we don't want to get into your whole portfolio here, but did you make any moves? Did you put anything in your watch list? And then have you made anything on the crypto side?
I did learn something on the crypto side. I want to touch on that real quick before we get out of here. But no, I've still been watching Microsoft. It's at 287 right now. It's trending down, but it had a positive day today. So we'll see what happens. I said I would buy it at the last time once it hit that 270. I didn't because I still see it moving in a direction where I think it could still go down. But, we'll see. I'm watching Microsoft, and I'm just kind of adding to some of my other positions, honestly. So, But what I learned on one of the crypto networks is China and – this is a big deal. China and Saudi Arabia, they settled. So China buys like 25% of Saudi Arabia's oil, and they settled that payment in not yen. I'm sorry. What's the Chinese dollar called? Let me see. What the hell? Rent? No, it wasn't that. I thought I said it's some different currency. Oh, maybe it was in won, but that's South Korean. Huh. Either way, the idea, or not the idea, the headline of this is that it didn't settle it in U.S. dollars.
Right.
You feel me? And that's major because U.S. is the leading world currency. But when stuff like this starts to happen, it shows how much the dollar is weakening, and if we lose the dominant world reserve currency, then it's going to shake up the whole world economy. It's going to shake up our power as well. It'll shake up our dominance. They say that every dominant world currency runs on like a 25 to 100 year time frame, and we're at like 106 years. So we're on the decline. So that's a big deal. And a couple of the guys on the show were talking about they could see America trying to do something to kind of like strike back, to try to shake things back up. Like, these debts and these payments need to be settled in our currency. How they'll do that, I don't know. But yeah, China and Saudi Arabia settled their oil exchange in non-U.S. reserve currency.
Right.
Yeah.
Any closing remarks? I know I got one, but
no. Go ahead.
Remarks? So
that was
one little gem I had was Jeanette asked a question to the team, to the Guru team, the Market Monday team, about your emergency fund. How much should you have for your emergency fund? And Ian basically said bare minimum, because I know from reading books that I've read, so success books or career books and all that stuff, entrepreneur books, they always say 6 months, or having at least a minimum of 6 months of emergency fund of all your bills and all that stuff. But now at this day and age, Ian's basically saying that you should have a minimum of 2 years of emergency fund. And that was kind of that was eye opener for me, because that's definitely something that I've always been I've always had in my arsenal of always trying to make sure I have my emergency fund. And one thing that they said was a minimum of 2 years. And I think Ian and Troy even said that they talk about and it's funny because they said minimum 2 years, but they talk about going to 5 years. So they have a whole nother game plan of, minimum of this and minimum of that, but I think their minimum is 5 years. So, and then a lot of gurus, they said they have decades of, obviously this is the people that got the big money and they can just save that much. But so it's interesting to say, because for a long time, it's always been 6 months, 10 months, but now it's 2 years minimum. Be aware of that. Obviously, again, safety first with your money, because again, stocks and the long-term game is for generations to come, right? It's for your family tree. It's not necessarily for you; it's for your family. So just know that it's a long-term game. Play the long-term game, but then also play the swing trade and the option game as well to diversify. So just look into that, man. But that's all I got for you guys. Appreciate y'all tapping in. As always,
exactly.
Hit us
Money
up
master
with
the game.
questions. Yeah. Oh yeah. That was yeah.
Yep. Yeah, Money Master the Game. That's a book recommendation. So check that out. I just typed it in on my Amazon, so I'm about to purchase that for sure.
Mm-hmm. But yeah, appreciate y'all tapping in. If you guys got any questions or got any comments, concerns, let us know. You know where to find us. Hit us up. You know what I'm saying? We definitely want to, we welcome the questions, because even if we don't know it, we want to do the research with you and kind of figure it out, together. You know what I'm saying? That's what this Square Night is all about. Square Knowledge, giving you all the highlights, and, us doing the research and kind of, talking it over and kind of figuring out what the best way to go about it. So hit us up. Y'all enjoy y'all rest of y'all evening. Keep at it, man. Keep at it. Keep on grinding.
Yes, sir. Till next week.
All right, my guy. Appreciate you.
Yep.